Hey guys, welcome back to another weekly exclusive video here on the membership program. Today what I want to do is take a closer look at the semiconductor equipment market we have. I think all the big players already reported earnings, so I want to do an earnings overview, take a closer look at how they did, take a closer look at valuations, and kind of just the outlook that they see for the overall market. Even if you're not invested in the semiconductor equipment, I do believe the guidance and the outlook that they do share is very, very important and crucial for semiconductor investors. If you guys have any questions or any suggestions on any videos you guys want to see next, I was thinking of doing a deep dive on either Qualcomm or Synopsys. Feel free to let me know in the comments below if you guys have a preference or if any other companies or any other topics you guys want to see on these weekly videos. Make sure to check it out. Obviously, with NVIDIA earnings coming out, I'm going to do a regular episode on my main channel for free, but I will definitely do a deep dive if I believe information there is crucial, right? No point in me doing a deep dive if there's nothing important to kind of mention, but if there is some crucial information that I usually don't share in the main channel, make sure to check it out on the deep dive. So let's get started. So first, let me just take a closer look at earnings overview. I'm going to take a closer look at, I believe, 5-6 companies. So we're going to look at Applied Materials, Lam Research, ASML, KLIC and SOFA, KLAC Corporation. We're also going to take a closer look at BESI, another one that I've done a deep dive in this membership program, but they didn't have kind of these this overview. We'll take a closer look at them in a bit, though. The most recent was Applied Material, ticker AMAT. Applied Materials is one that I do own, and we can see earnings per share were $1.90. It did beat analyst expectations, which were roughly $1.74. Revenue did fall roughly 1.5% to $6.4 billion, but it did beat analyst expectations of 6.15. So we can see Applied Materials killed it in both revenue and earnings per share. And if we take a closer look at guidance, they also guided earnings per share of between $1.82 to $2.18 versus $1.60 is what analysts were expecting. And quarter four revenue is expected to be 6.1 to 6.9 billion when analysts were expecting roughly 5.87. So we definitely could see that Applied Materials is beating expectations, and this is one that I do own in my portfolio right now. Like I mentioned, later on we are going to take a closer look at valuations. Next, I want to take a closer look at Lam Research. Lam Research, I do not own, but I do believe this. If I was to grab a second kind of top mature semiconductor equipment company outside of Applied Material, I do have BESI, which is more in the mature, more of a growth story to some extent. But if I was looking for more mature with some growth opportunities, I think Lam Research would definitely make that portfolio. So Lam Research, we can see earnings per share $5.98, which beat analyst expectations by roughly 91 cents. Revenue fell 31% year over year to 3.2 billion. It slightly beat analyst expectations of roughly 3.1. So Lam Research did kind of outperform in earnings and revenue, but nowhere near the way that Applied Materials, and this was roughly 4 weeks ago. They do mention that in guidance for quarter one. Funny thing is, a lot of these earnings and a lot of these semiconductors, they do have kind of their quarters a little bit mix and match. We can see Lam Research, this was their quarter four. Now they're guiding for quarter one, and they do expect somewhere between $5.30 to $6.80 on earnings per share. I do believe that's such a wide gap, and that's kind of it's the bottom end or the low end is kind of in line with what analysts are expecting. If they do get closer to that top end, that's going to blow analysts' expectations. Revenue between 3.1 and 3.7 billion versus analysts 3.3 billion. Again, in the low end, it does seem like it's closer to analysts' expectations. If they kind of go in the high end, or if they meet the high end expectations, these are going to be some nice quarters for the company. Now we're going to take a closer look at ASML. ASML was, I think, one of the first to report. This was about a month ago. They did report their quarter two earnings per share of roughly €4.93 euros, which did beat analyst expectations by roughly 40 euros. Revenue was roughly 6.9 billion euros versus 6.5 billion that analysts were expecting. So they did beat in earnings per share. They did beat in revenue. And for quarter three, they see somewhere between 6.5 to 7 billion versus the 6.4 billion that analysts were expecting. So again, we're seeing ASML also do the same thing. Now we're going to take a closer look at two other players, KLIC and SOFA and KLAC Corporation. KLIC and SOFA, I do believe, deals more with the back end of semiconductor manufacturing, while KLAC Corporation deals a little bit more in the front end. So KLIC and SOFA, earnings per share 55 cents. It did beat analyst expectations by 23 cents. That's great news. Revenue did fall roughly 49%. We are seeing kind of this weakness still in the semiconductor market as it is right now. That's what we're going to take a closer look at overview, to roughly 191 million. This was very in line with what analysts were expecting of 190 million. So these companies are really good at kind of showcasing strong positive earnings per share even during a crazy downturn in the market, which we are seeing. So for quarter four, they expect revenue to be somewhere between 38 cents to 46 cents. Unfortunately, on the top end, that's when they would be meeting analyst expectations. So maybe analysts and investors weren't too happy about this. Quarter four revenue of roughly 180 to 220 million. Analysts were expecting somewhere around 210 million. Again, this is closer to the higher end of their expectations or of their guidance. So it does seem like maybe investors might be a little bit worried about KLIC and SOFA right now. The next one we're going to take a closer look at, and last one we're going to look at before we take a closer look at some growth opportunities in the semiconductor market and the semiconductor equipment. KLAC Corporation. So KLAC Corporation, they reported roughly 3 weeks ago. Earnings per share of $5.40. It did beat by 54 cents, so roughly a 10% beat. That's pretty amazing. I think actually even higher than that, more like 12, 13%. Excuse me. Revenue fell roughly 5.3% to 2.36 billion. It did beat analyst expectations by 100 million. Nothing too crazy, but again, we're still seeing that positive beating in earnings per share and slightly beating on revenue. For their quarter one guidance on the low end is meeting analyst expectations on earnings per share. And also it does seem like on the revenue, it's a little bit higher on the low end than analyst expectations. So KLAC Corporation definitely seems to have done a good one. I want to say the only two that might have worried investors a little bit, I want to say, is KLIC and SOFA, like I mentioned. And the other one I want to say is ASML. Even though they did outperform in revenue, we did know that one of the main reasons is just revenue recognition changed a little bit, which is kind of showing them be a little bit more than expected. So everybody else did really well. I want to say, to me, the semiconductor equipment market has numerous growth opportunities, right? This is a company market that I'm really much enjoying. I invest in Applied Materials, and I'm also investing in BESI Semiconductor. I do believe if I get better opportunities in forms of stock price, maybe I would even add other players into my account. And the main reason is here. Look, we can see in the upcoming years, there's numerous semiconductor fabrication plants being built all around the world. In TSMC, we have some in Taiwan, we have some in Arizona. Micron, we have some in New York. Intel, we have Arizona, Ohio. Global Foundries, we have in New York. Texas Instrument, Samsung, and the list goes on and on and on, right? So we're seeing huge growth of manufacturing plants being opened up all around the world. And this was reported on June 6th of 2023. I do believe BESI does a great job of kind of showcasing this. But since June 6th of 2023, so about 2 months ago, we did hear of even more plants being built. For example, Intel mentioned that they're going to invest more than 30 billion euros in Germany to build 2 leading-edge semiconductor facilities in Germany. We also saw earlier in August 8th, that TSMC is teaming up to kind of create a joint venture with Infineon, NXP, and Bosch to build semiconductor manufacturing in Europe that's going to really focus on automobile chips. So they do mention it's more like the 16 to 12 nanometer and the 28 to 22 nanometer line. Not your crazy advanced chips, but again, we are seeing more semiconductor manufacturing plants being built all around the world. And I do believe we are going to continue to hear news like this. Another thing that's happening with the semiconductor market is there is a change in structure. We are expected in this kind of 2 nanometer structure to kind of see the gate all around transistor. We're also seeing different ways where semiconductors are being built, like backside power delivery, 3D NAND, 3D DRAM. We're also seeing kind of new players come into the new ASIC accelerators like Google. These other companies also need some form of solutions as well. Heterogeneous integrations like hybrid bonding and all those like high bandwidth memory as well. So there's a lot of changes happening in the semiconductor and how advanced semiconductors are being built, and you need equipment to be able to fulfill those needs. So there's two main tailwinds in my headwinds. Tailwinds is the right word. Tailwinds in the semiconductor equipment market. The first is just all these manufacturing plants being built. The second is there is kind of a new way that semiconductors are being built in ways of new architecture, new structures, new heterogeneous integrations, and this is creating another tailwind for semiconductor equipment players. So now I want to take a closer look at outlook that each player gave to us. Again, I think it's very important to understand where the market is at right now. So ASML, they did mention that, hey, there's still significant uncertainty remains in the market due to number of global macro concerns around inflation, rising interest rates, recession, and geopolitical environment, including export controls. Although certain end markets seem to be reaching the bottom of the cycle, the semiconductor industry is running at very high inventory levels, leading customers to moderate wafer output as the supply chain works to reduce and rebalance inventory levels. So we can definitely see it's still a very interesting time in the semiconductor market. Even though some places have bottomed, the semiconductor industry as a whole is still running on high inventory. They do talk a little bit about their EUV and DUV business. Their EUV, they have seen some shift in demand timing. And they do mention that a majority of the shift are due to fab readiness. And for those that are not familiar with fab readiness, I kind of mentioned in the previous slide that there's so many fabrication plants being built all around the world. And building these plants takes a lot of work, and you need some special construction teams and special equipment teams. And certain players like TSMCs are seeing delays because they don't have the proper talent. And because they're seeing these delays, they're kind of pushing their inventory orders out a little bit more. I do believe that's more short-term pain. So short-term pain like that gives us buying opportunities. I definitely will tell you, because eventually they are going to buy that equipment, right? It might just be a few quarters after, because there is an issue with the construction of these plants. In the deep ultraviolet, they also see those same delays, but luckily for the deep ultraviolet, they are mentioned that the demand is being filled up by their Chinese customers. They do mention that Chinese customers over the last 2 years they weren't fulfilling their demand. Their demand rate fill rate was less than 50%. So that means for every like 4 orders that maybe the Chinese customers were making about a year and 2 years ago, they were only getting filled less than 2. So right now they are taking this opportunity that, hey, maybe there might be a weakness in certain inventory levels. These Chinese customers that were kind of underfilled or undersupplied in the past 2 years, they're saying, hey, look, give us those equipments because we need them. So they're taking these opportunities to receive and install systems. So some people might say, hey, look, that's the weakness. China could be another headwind, because once this market leaves, it can obviously be bad for semiconductor companies. I do want to say that's true to some extent, but I do want to say right now it's just the Chinese customers meeting with the demand they previously had. Eventually, I want to say in the upcoming quarters, we are going to start to see a pickup by the rest of the world, and I don't think it's going to matter too much. Now let's take a closer look. I will have outlook from Applied Materials. Applied Materials mentions that they continue to execute very well. We took a closer look at that earnings overview, and Applied Material is killing it. But they do mention wafer fab equipment spending is slower in calendar 2023, but they are seeing strong growth in their fastest growing end markets and winning key decisions across leading edge foundry, logic, DRAM, ICAPS, and advanced packaging. So they are seeing some form of traction there. They also mentioned that one of the great things about the market right now is two things: Internet of Things and AI computing. And they are saying that Internet of Things and AI computing are two sides of the same coin. I think this is pretty important because Internet of Things, this is at the edge. And these are your consumer devices, your vehicles, your buildings, your factories, and infrastructures. And all of these are getting smarter and more capable. So now customers that serve these Internet of Things, communications, auto, power, and sensor markets, and this is what they call ICAPS, are growing and represent the largest portion of wafer fab equipment sales. So some might be wondering, hey, Jose, how does IoT fit with AI computing? Well, with IoT, you are seeing kind of this increasingly intelligent edge devices, and they are fueling explosion of data generations that can then be transmitted and combined to create very large data sets for training AI models. So that IoT is kind of bringing all that data, and then all that data can be used for AI computing. So they do mention that as a result, AI is becoming the key driver of the leading edge logic and DRAM roadmaps, as well as heterogeneous integration, which create exciting new opportunities for device designers. They kind of also shared their quarter 3 business environment, like we saw that ICAPS, which were all those products, IoT, communication, auto, power, and sensors. That market is up. It's up pretty big. Leading edge is down, but is kind of picking back up a little bit. The biggest down market right now is the NAND market, which is in the memory business. They do mention the DRAM market, though. It is seeing some great traction with things like HBM, which is high bandwidth memory, and this is something needed in kind of a lot of these AI chips. And they do mention that as DRAM investments increase, they feel very positive about their opportunities, especially in high performance DRAM for data center. They do mention that high bandwidth memory is less than 5% of DRAM capacity today, but it is expected to grow at a 30% compounded annual growth rate over the coming years. And they do mention another key growth driver is their ICAPS. We keep talking about this, and they see ICAPS demand as sustainable as these customers are delivering enabled technology for large global inflections that will play out over the next year. They even gave an example. They mentioned where if you're taking a closer look at advanced driving systems, solar and wind energy, especially in the solar and wind energy, where each megawatt generate requires roughly 3,000 to 4,000 of power chips, and the smart grid, which could drive 50 billion of annual silicon demand by the end of the decade. So right off the bat, even though if you might not be a semiconductor equipment, we can already see where there's numerous growth opportunities. First growth opportunity we saw was the Internet of Things market. The second growth opportunity we are seeing is companies that are dealing with DRAM investments, and especially high bandwidth memory, as that is a market that's expected to grow dramatically. And the final one is kind of this kind of power situation, as they are growing a lot in these ICAPS market. So next, what do I have? I think next is Lam Research on the list. Lam Research, very similar. They do mention that calendar year 2023 wafer is tracking to the mid $70 billion. This is not new, right? 70 billion last year was roughly 90 billion. So about a 20% drop is what many people are expecting, which would be mid 70 billion. They do mention that they continue to see second half 2023 wafer equipment tracking higher than the first half. They do mention that they are seeing upside coming from domestic China related spending, as well as strong growth in high bandwidth memory or HBM related demand. Very similar to how we saw that HBM in applied materials, and we're also seeing that strength in China, very similar to what ASML mentioned. I'm gonna guess very similar to ASML. Lam Research probably was under fulfilling their Chinese orders in the past few years, and now that some companies might be slowing down, Chinese customers are willing to pick that up right now. They do mention they continue to see the second half 2023 wafer tracking higher than the first half, while 2023 is down year for wafer. The long-term growth dynamics for the semiconductor industry are strong, and I do believe that's very important to understand. Long-term for this market is still pretty strong. Lam Research shares some pretty cool information. They talked about advanced AI creates opportunity. They do mention that every incremental 1% penetration of AI servers in data centers expected to add roughly 1 billion to 1.5 billion of additional wafer fabrication equipment. For those that are not familiar, I believe AI servers in data centers right now is less than double digits. I believe it's like in the 7-8%, if that. So there's definitely a nice growth opportunity here thanks to AI servers. Other things like also advanced packaging solutions are other industries that can benefit from kind of these wafer fabrications and the way the market is seeing. So now I want to take a closer look at the outlook BESI gave. So BESI, they believe that the prospects for wafer level assembly growth has increased successfully each quarter. This belief is based on high-level interest expressed by significant resources committed to and sampling work done by leading front-end customers, OSATs, and the development community, particularly for data centers, AI, mobile, and high-bandwidth memory applications. For those that are not familiar with BESI, they do deal with front-end and back-end solutions in advanced packaging, and that's obviously seeing a huge growth in the market. Like I mentioned, I did do a deep dive on BESI a few weeks ago. Check it out. This is one that I'm really adding into right now and have in my portfolio. I want to increase my position size on this one a nice amount. They do mention that they are developing integrated hybrid bonding productions lines with Applied Materials. They are also encouraged by the shipment of BESI's next generation thermal compression bonding system for qualification in high volume production. Further, the Singapore cleanroom facility was completed recently to support process development of hybrid bonding adoption. They do mention that the assembly market formed a bottom for this down cycle in Q2 of 2023. So at least for BESI, they do believe the bottom is here. And in addition, customer utilization rates have increased recently, although it's too early to say whether such increase represents a seasonal or structural trend. As such, the near-term market outlook remains uncertain and varies per end user market. So BESI, I want to say BESI believes their market is coming to a down end or to the bottom already, but the future is still uncertain. So who knows? Maybe we can be flat for a few quarters before kind of picking back up. Now we're going to take a closer look at KLIC and KLAC. KLIC, they did mention that they maintain an aggressive pace of development and broaden their technology engagement in several areas. Additionally, their core market continues to improve due to technology trends, incremental capacity needs, and ongoing product refresh cycle. They continue to see gradual demand improvements across the ball bonder market and anticipate more meaningful demand recovery as macro environment recovers and inventory is digested throughout the electronics value chain. Long term, we continue to anticipate nearly 10% semiconductor unit growth in calendar year of 2024 and anticipate unit growth will remain above average in 2025. So future looking, we can see that this market is pretty strong for the 2024 and 2025. Now, if we take a closer look at KLAC, again, KLAC remains unchanged that the wafer fabrication equipment market is going to be down approximately 20% from that 95 billion in 2022, which will be in the mid to high 70s. While the timing of a meaningful resumption in wafer equipment remains unclear, they continue to see overall demand stabilizing around current business levels for their semiconductor process control system business, and they expect this demand profile to continue through the remainder of the year. So overall, KLAC remains positioned for strong relative performance versus the industry of 2023. Looking ahead, they continue to see the business environment stabilizing and remain confident that the secular trends driving long-term semiconductor industry demand and investments in wafer fabrication equipment remain strong and compelling. So overall, we can see that, hey, the market still is showcasing a bit of a weakness for the overall wafer fabrication equipment, but a lot of companies believe the bottom is here, and they do expect maybe a second half of the year. So now I want to take a closer look at valuations and kind of talk about some of the companies I enjoy. So the biggest player right now is ASML with roughly 257 billion. Second is Applied Materials with roughly 120. Lam Research with 86. KLAC Corporation with 65. The two small ones here are BESI with roughly 8.4 billion and Kulicke and Sofa with 2.8 billion. If we take a closer look at PE ratio, the most expensive is BESI, but it is one of the smallest, and I do believe there's more growth opportunity there. The second one is ASML, PE ratio of 33. ASML is usually, we can see it usually trades at a crazy valuations to some extent because it does have that moat. Kulicke and Sofa, KLIC has probably a little bit more growth opportunity right now, but then we can see Applied Materials, Lam Research, and what is this one? KLAC, which are more mature players, tend to trade around that high teen valuation, and I do believe that's going to maintain the case. Now I wanted to take a closer look at each company individually and share my thoughts on purchasing or selling. Applied Materials, PE ratio forward right now and forward 1 year are all sitting around that 18 levels. I think that's normally the case here. I don't think Applied Materials is overly valued to any extent. Applied Materials is one of the ones that I wouldn't mind adding for those mature companies. Lam Research, a little bit different, right? Lam Research trading at roughly 18, right? PE ratio of 19.7 right now. Forward is sitting at 24, but forward 1 year sitting at roughly 18.31. So very, very similar prices to kind of applied materials. Lam Research is another one that I wouldn't mind adding into right now in kind of dollar cost averaging. I don't believe it's overvalued. Now ASML. ASML, in my opinion, is a tricky one. I do understand that they have that moat, but I always think that ASML is trading at a very, very high valuation, and it continues to do so. ASML's PE ratio of 26.9. It's nothing crazy. We can see it's a little bit lower than its average to some extent. If it ever dropped maybe to 24, 23, even in the low 20s, I do believe that's a better buying opportunity. ASML, I personally would hold out for right now. That would be me. But obviously, this one is also a big, big player. Now, if we take a closer look at Kulicke and Sofa, forward 1 year is at 23.68. This is more of a growth story, right? We saw a $2 billion market cap. This is more if you're looking for a growth story, but a lot more volatile, in my opinion. KLAC Corporation, another one that's kind of trading very similar in line to a lot of the mature companies like Applied Material, like Lam Research, sitting at around that 18 forward 1 year PE ratio. Very similar to Lam Research, very similar to Applied Materials. I don't think it's overvalued at these moments. I wouldn't mind dollar cost averaging. In forms of the three that I mentioned, right, those three big players, Applied Material, Lam Research, and KLAC Corporation, I would put it in that order. Applied Materials, then Lam Research, and then KLAC Corporation, if in ways that I would personally add. ASML is also a big player, but like I mentioned, I do believe ASML is a little bit more on the heavier valuation. BE Semiconductor, because it is a international company, it's very hard to kind of get the forward PE ratios. Right now, it's currently trading at 46. It's pretty high. But in my semiconductor deep dive that I did on it, I actually take a closer look at forward PE ratios based on expectations that I believe this company can do in forms of earnings per share. And I do believe their forward PE ratio is closer to like that 20, to those 20 levels. So personally, I don't think BESI is crazy if you're looking for that growth opportunity, and I really do enjoy that company. Just some final look on financials. Most of these players, even though they do carry a nice amount of short-term debt, of long-term debt, they are all positive in cash flow from operations in the trailing 12 months, even though we are kind of in this down cycle, and they do have plenty of cash and short-term investments. The only one that, in my opinion, looks a little bit iffy is KLAC Corporation, which has a lot more long-term debt compared to maybe a single cash flow from operations trailing 12 months or its cash and short-term investments. But that's the only one, like I mentioned. In forms of preference, I think Applied Materials, Lam Research, if I'm looking for a mature company, if I'm looking for a growth opportunity and maybe understand that I might not be getting the best value, I think BE Semiconductor might be the best play. ASML is obviously has always done well, but I don't know. I prefer those other two. KLAC, very similar to, like I mentioned, I prefer Applied Materials and Lam Research. Kulicke and Sofa, another growth opportunity. But I really do enjoy BESI, and I'm only looking for maybe one growth story. I do like BESI at the moment. So I hope you guys enjoyed this episode. I hope you guys are enjoying the program. I do believe this episode showed so much information that you're not going to get. And if you're trying to get this information, if you're trying to do this information yourself, I think it would take you numerous hours to see where the market is at right now. So I do believe I am providing some great value with just 1 month subscription in this just one video alone. So guys, take care. Have a good day and see you all next time.